Additional unique opportunity recognition.
So far, we have devoted most of our discussion to single options provided by resources, for example, to defer, not defer decision, to enter, not enter. We now turn our attention to the more realistic context where resources provide multiple choices to firms. 38 One might imagine a situation where one option, such as, for example, the option to delay a purchase, might create several opportunities for management to take corrective actions. Management might, for example, assess changes in variables such as oil prices, environmental guidelines on drilling, technological advancements of drilling, increased willingness of investors to fund new projects, and so forth, which might lead to more accurate valuations. In that case, the option might have also created opportunities for management to positively act beyond the initially identified purchasing decision. Deferring purchase decisions, for example, may have provided the firm with opportunities to further consider the appropriate mix of debt and equity to finance the purchase of the oil field. As such, an option might in reality create more than one opportunity for management to identify new options. Similarly, the option to delay the purchase of an oil field may also enable managers to reconsider and make changes to other projects. For example, the firm may consider the purchase of an oil field and also the development of an alternative fuel source. The purchase of that alternative fuel project may be strongly dependent on future oil prices, as is the oil field purchase. If oil prices decline, the development of the alternative fuel source may be delayed because consumers are less willing to switch. If oil prices increase, consumers are more likely to demand an alternative fuel source. In this case, the option to wait and see before having to decide whether to purchase the oil field might impact multiple projects. Options on discovering additional options refer to what JESC 39 labels compound options, or simply, options on options. Often, unique knowledge provides the option to discover a multitude or cascade of subsequent choices. The growth of Walmart provides an example of such an option cascade. 40 Walmart has operated in discount retailing for over 4 decades, and in that time has expanded into pharmacy, financial services, toys, electronics, groceries, optometry, warehouse stores, and so forth. The platform on which it based such expansion was itself built from the knowledge of operations it acquired over that period, knowledge of regional buying habits of its current and future customers, as well as the ability to alter its knowledge processes to changing circumstances. In short, learning by Walmart cascaded into a series of subsequent opportunities. The initial option Sam Walton exercised to open his first 5 and dime store now appears to be much more valuable than anyone originally anticipated. Often unique options translate into value that is unanticipated by outsiders and insiders. One important implication is that outsiders, including public equity markets, are incapable of efficiently valuing or assessing the competitive threat of option-producing companies.